Hi, my name is Christian Waldegrave, Head of Research at Teekay, and this is our conventional tanker market update for December 2014. And when we spoke to you last month, the rates were coming up in all of the crude tanker sectors and the product sectors, and those rates continue to strengthen into November. In fact, November's been one of the strongest months that we've seen for a long time. On the Vs, rates got up to about $50,000 a day on average, which was the highest since 2010. And on the Afras and on the product tankers as well, we saw rates the highest in perhaps 6 years as well. So it's been a very, very strong market, really continuing that upsurge that we saw in October. And there's been a couple of reasons behind the strength in rates over the last month or two. One, I think, has been the collapse in oil prices that we've seen since the summer. Brent crude is now down around $70 per barrel, whereas it was around 110 in the summer. And that low oil price combined with high oil supply has led to a lot of purchasing of oil, both for extra consumption, but also for stockpiling, both for strategic stockpiling and for commercial stockpiling. So we've seen a lot of oil movements. We've seen a lot of oil moving from the Atlantic to the Pacific. And then secondly, we had some seasonal factors in November as well that caused the rates to spike, especially in the Black Sea and Mediterranean, where we had some quite lengthy delays through the Turkish Straits. In November, those delays got to about 5 to 7 days each way, and that caused the Mediterranean rates to really spike upwards towards $100,000 per day on both the Aframax and the Suezmax. And we also saw some weather delays in East Coast Mexico as well, which gave the Caribbean a bit of a bump at the start of the month. So it's been a very strong November, kind of an early start to the winter spike that usually comes in during December, and that's a positive sign. The rates have started to come off a little bit in December, which is probably just a reflection of some of those weather delays have eased a little bit and ships have got back in position. But we do expect that the market will stay strong through the winter, both due to extra winter demand and the normal weather delays, but also, like I said before, with oil prices being low, that should help stimulate some demand. In fact, OPEC met last week, and during the OPEC meeting they decided not to change their production until at least their next meeting, which is going to be in June next year. So that should ensure that oil prices stay low. In fact, I think oil prices could drop a bit more in the coming months. And again, that combination of low price, high supply should mean that at least for the next few months, it should be positive for tanker demand. And I think through winter and into the first half of next year, that means we're going to have quite a positive tanker market. If we step back a little bit and take this opportunity to look at 2014 as a whole, I think the market performed a lot better than we thought it was going to be. We always thought that 2014 would see a rising market, would be the start of a rising market, but it's probably happened a bit quicker than we expected. The crude tanker rates are probably averaging around the low to mid $20,000 per day this year. The product tankers are a little bit lower, but they're all on a rising slope, and we think that's going to continue into 2015, both due to demand increasing, due to low oil prices and strong movements from the Atlantic to Pacific, but also because of low fleet growth. In 2014, the fleet only grew by 1.5%, but in the crude tanker sectors, there was actually negative fleet growth. The Aframax fleet, the uncoated Aframax fleet, shrunk by about 20 vessels this year, and even the Suezmax fleet shrunk by a couple of vessels, and that will probably continue into 2015 as well. Our forecast is for 2% tanker fleet growth next year, but most of that is on the product side, the MRs and LR2s, whereas we expect the Aframax fleet to shrink again, probably by about another 15 vessels, and the Suezmax fleet should probably stay steady again. So when we look at 2015, I think we can expect an improving market through the year because of low fleet growth and strong oil movements from the west to east. But if we're going to look for a couple of wild cards, one would be what happens during the course of the year when oil prices do drop. Will OPEC change their mind at their June meeting and decide to cut production, or will production start getting shut in elsewhere? Perhaps US shale oil or Canadian oil sands starts to get shut in, and what will the impact be on tankers? If shale oil doesn't get shut in the US, are they going to start looking to export, because we're seeing an increasing glut of light sweet crude in the US, and there's perhaps going to be a desire to get that crude out to international markets. So these are some of the key factors to look out for in 2015. But on the whole, I would say it's been a better year than we expected in 2014, and all the signs are for a positive 2015 as well. So So that's our conventional tanker market update for December, and we'll speak to you again in 2015.